The world economy is going to hit the biggest financial headwind since World War II. What does that mean? You know what I mean? That's what we want to talk about. But more importantly, what can you do? If you're hanging out with idiots, you're probably an idiot. And so when you and Kenny put on the collective, I'm just blown away at the quality of people that showed up. They're already wealthy and they're proactive moving forward. Yeah. And then I'm in Walmart looking at another breed of character running around there. They're clueless. Yeah. And what I found overall, because my whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers. Money is infinite. Another thing is about the media is so biased today, I can't stand it. Yeah. Like 60 Minutes this past Sunday, just as IMF is making their announcement, this billionaire young entrepreneur, he's giving every kid a free college education with their parents. I said, well, it's good they're going to college, but what do they learn about money? Yeah. Nothing. And most of these financial planners and real estate brokers, all they know is a rising market. Yeah, that's right. Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up. Yeah. And we were just talking to Raoul Pal, and he said the problem with that is that the bull goes up the stairs. Yeah. The bear comes out the window. Or I've heard the elevator, but the window. That's a little bit more dramatic, isn't it? No, but Raoul Pal says when it comes, it's 4 months. Yeah. That's how fast this bear is going to go out the window. So $10,000 a month coming in, you got $7,000 in expenses, $3,000 net, you're free. Yeah. And there's tax breaks for it. And then we make most of our money from Kenny. Not most of it, but we get income from 13,000 or 14,000 rental units with no equity. It's pure debt. And we pay no taxes. And then we invest in oil wells. And we don't invest in oil companies, oil wells. And so when Biden took the Keystone XL pipeline, he cut that project. Oil went from $30 a barrel to $130 a barrel, 400% raise in one day. I actually liked Biden for about 20 minutes. Problem is, higher oil prices cause higher fuel prices and higher food prices, which is going to wipe out the poor middle class. Yeah, because they're the people that get disproportionately affected because a higher percentage of their income goes to those things that are going up in price. And they want to tax the rich, but there's too few rich. Yeah, well, what they don't... Yeah, we don't pay taxes anyway. Yeah, the problem with that argument, I've been hearing that a lot lately. I've been hearing that in Davos. All the time. Yeah, we talked about that prior to recording, is the cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff. Yes, produce more. You got to produce more stuff. Yeah, produce more oil. Guess what? Yeah, so if you're just taxing the people who are producing, that defeats the purpose. That's going to create most likely higher consumer price inflation. That's what Sarah's complaining about is the baby formula. They got so many regulations they can't produce it here. Well, yeah,
everybody's blaming this baby formula regulation on supply chain, but that's not actually what's happening. It's over-regulation. Yeah, right. So we just imported how many millions of cases of baby food? The United States, the greatest nation in the world, had to import baby food. Something's wrong. We can't print food. We can't print energy. And at a certain point, if those countries that we're getting that from say, you know what, we're not going there anymore. We're not playing your game. But isn't that what's happening? Yeah. So a great example is let's look at China starting to do deals with Saudi Arabia. Yeah. And I think most likely Russia in yuan. Okay. So most people just see that and they say, oh, it's kind of the deterioration of the dollar. But no, there's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed. The oil. That's right. So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart because they want our dollars so they can go buy the oil. So they're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. You see,
smart for them.
But what that means is now the United States doesn't have as much leverage over China as it once did.
Right.
So China can start gradually. It doesn't happen overnight, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. So then, where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all. Excuse me, if you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world.
That's right. And that was what Rothschild said. I care not who makes the rule.
Right.
As long as I control the money. I don't know what you call it, but it's a magical informational group called the Collective.
Yeah.
I go to it, I'm blown away. I am blown away. The point here is that you are who you hang out with.
Absolutely.
And we talked about it, the gap gets wider and wider depending on who you hang out with. And if you're hanging out with village idiots, guess what? You're falling behind big time.
Yeah.
And I was saying to you from Portland, and Kim bought her first rental property in Portland by Eastmoreland, and she found religion. She could buy something for nothing.
Yeah.
In the worst economy ever.
Yeah.
Interest rates were 9%, and people are crying the blues at 5%.
Yeah.
And once you understand that's all in your head, and you can adjust the dials in your brain, you'll see a different world.
And it's all about that knowledge.
Yeah, and so we have Rel Pell on just now. There's more opportunity today.
Back in the late 90s, everything was .com, and they were getting these billion-dollar valuations. And it is true that the internet was the future. Yeah, it is true that the internet was the future, but not all those companies. 99% of them go bust. And I think it'll most likely be the same with crypto. There will come, maybe Bitcoin, Ethereum will come out winners in the long run, and will be here. I don't know what purpose they'll serve. I don't know if they'll be transactional in the case of Bitcoin, or be more of a digital reserve asset, store value. I'm not quite sure, what place it'll play, but I think it'll most likely play out the same way the dot-com bubble burst in the 1990s. Jim Rogers, I think, articulated it beautifully in the Market Wizards books, where he says you've just got to buy panic and sell hysteria. And sometimes, you can tell when there's hysteria, and when Bitcoin was at 65,000. And now I'm long-term bullish on Bitcoin.
Me too.
But you got to pick and choose when you buy based on that panic and hysteria. And there was I was seeing it on Twitter nonstop. I was seeing it in social media. I was seeing it in all these chat rooms like Clubhouse, where the hysteria was just mind-boggling. And that's something that I think people can sense, but they need to make sure they're not getting caught up in that emotional frenzy. They're going to make bad decisions.
And then what we were saying yesterday is that the problem with bull markets is it makes stupid people look smart.
Yeah.
And the saying is, the bull goes up the stairs, bear goes out the window. And when it comes down fast.
But at the end of the day, who do you blame? The Fed. It's the Fed, because this is all just pushing people out the risk curve. Well, it's pushing people out the risk curve because you keep interest rates artificially low.
Do you listen to the Fed?
Well, there you go. Good point.
So the whole thing here is, get smarter. That's what we're talking about.
Or at least hang around smart people.
Yeah. I mean, oh my God. It's going to be as Rel Pell was saying, man, we're going to make so much money because we have what's that thing called? Green New Deal stuff? Carbon credits. And we have biotech coming online and all this. There's more opportunity today, but not if you hang out with idiots.
Yeah.
We have no stocks, bonds, and mutual funds because my rich dad taught me differently. So today, like I was saying, and I said this all the time, we own oil wells. We don't own oil companies. We don't own stocks. So again, when Biden cut the XL pipeline off, oil went from 30 to 130. Holy mackerel, we're making so much money today. The dangerous thing is people are being wiped out. Inflation's killing them, food and fuel.
That's right.
That's what scares me.
Yeah. Yeah, and that's the moral of the story, and that's the way these things always play out. any intervention they have in a free market economy, it's always going to make things worse for the poor and middle class, whether it's through the insidious, invisible tax of inflation, or whether it's just propping up assets that are creating these bubbles where people get completely wiped out, and misallocation of resources and malinvestment. I mean, we've got to understand that central planning, or Marxism, as you always say, this is a very, very slippery slope. This is the road to ruin. Or as Jim Rogers says, this is the quick path to the poorhouse.